By the end of this week, the first quarter of the year will be over. What does that mean for stocks and markets this week? That's coming up on 3 Minutes on Markets and Money. We talked about last week that the market was rallying fairly sharply here because we were moving into the end of the quarter. First of all, we have very negative sentiment. We have very light positioning by equity managers, which basically means they're off sides because of the decline that we had during the first couple of months of this year. So this rally, which was expected, and we've been talking about this over the previous few weeks, and was coming off good support here that we had going back to February, had this nice rally. We got above the 50 and the 200-day moving averages. So again, cleared a good bit of overhead resistance. And that really sets the market up here for a little bit more of a rally potentially this week until we get to the top of this 2 standard deviation trend from the 50-day moving average. But also we're going to start pushing back into overhead resistance that really kind of comes back here to December of last year. Markets are now very overbought on multiple levels. And again, we're very close to triggering a sell signal. That doesn't mean markets are immediately going to sell off here and go back down to lows. But again, with markets very overbought, we had a lot of kind of pent up fuel, right? A lot of negative sentiment, a lot of offsides positioning. That fuel gave the rally the potential here over the last week or so. Now, as we move into the end of this week, mutual funds, hedge funds, pension fund managers, etc., all need to rebalance their portfolios for end of the quarter reporting. So that does suggest that we could see markets kind of hold in here for the next few days. Now, it doesn't necessarily mean that markets have to rally. We could just simply kind of just trade sideways here for the next few days. But again, once we kind of get through this, watch, because we are very overbought here. So when these things do turn into sell signals, which should happen either this week, really kind of late by the end of the week, wouldn't be surprised to see these sell signals trigger. That could put some downward pressure on asset prices, at least in the short term. Now, the juxtaposition to the stock market is now the bond market, which is currently very oversold on multiple levels and very close to triggering a buy signal. Now, if we start getting a risk-off move in equities, that would potentially bode well for bonds to actually perform better. Bonds more than 2 standard deviations oversold here. Again, extreme oversold condition on bonds would provide a bit of a rally here, at least back to the 50-day moving average, which is a decent little gain here for bonds in the short term. That would coincide with a risk reduction move in the equity markets. Again, money flowing from risk on to risk off would potentially flow into bonds. So again, if we start seeing a bigger correction in commodity prices as an example, start to see a correction in equity prices here after we get past this week, that's going to help push bonds back up towards their moving averages, at least for initial tests of resistance. Bonds could certainly move further because if we look at the long-term trend of bonds, we're exceptionally oversold on a weekly and a monthly basis. So again, we could really see a much bigger potential move in bonds if we get into a bigger corrective move in stocks over the course of the next few months, particularly as we head into summer. That's 3 Minutes on Markets and Money today. I'm your host, Lance Roberts. We'll see you back here tomorrow.